Edelweiss and CNBC TV 18 present Change India, What India Needs.
$1 trillion for infrastructure, 500 billion for manufacturing. Ask somebody else and you'll possibly get different numbers. But the point is that India needs a large amount of capital and it needs it quick if it's to grow fast enough to meet the mounting aspirations of its over 1 billion people. And capital goes to places where it sees good returns, good governance and good prospects for growth. Welcome to Change India, where this week we discuss what India needs to do to become an attractive destination of capital, domestic and, as important, foreign. Joining us is a panel of some of India's finest financial minds: Akhil Gupta, Chairman of Blackstone India; Nilesh Shah, MD and CEO of Axis Capital; Navneet Munot, Chief Investment Officer, CIO at SBI Mutual Fund; and Nitin Jain, Head Capital Markets at Edelweiss Securities Limited. Gentlemen, pleasure to have you with us. The mood certainly has changed, but what does the government need? Or let me ask you, put it in your language, Akhil. If India were an entrepreneur looking for money and it or she came to you, what would you say he or she needs to do?
I'll say just one yardstick. That is, if today, if you look at the ease of doing business, we rank like about 150th or something. I think we should strive to make that to at least top 50. And then leave it to the rest to the entrepreneurs, right? The investment community, the role of the politicians, the bureaucrats is to make that happen. Everything. This is the only country, large economy, I would say, that has the potential, and not just the potential, everything is placed for us to grow at 8% for the next 20 years.
Okay.
China has done that, Korea has done that, Japan has done that, Brazil has done that, Singapore has done that. We can do it, and we were on that track, except the global financial crisis happened, and then we had a governance crisis. I mean, we have to reduce bureaucracy, we have to get rid of all the archaic regulations. I think this incremental change in regulations don't help, because you're still carrying the legacy. The economic structure, the structure of the economy is very different, the marketplace is very different. It was not such a global economy as it is today. Today you have to have a completely different set of rules, and you cannot look at the past and make incremental changes. You have to look at from first principles. What kind of regulation do we need? And the second thing I would say, we should try and rely on the market mechanism. Market has an amazing power to make things happen. And regulation's job should be to prevent abuses and excesses, but let pretty much 95% of the transactions happen through the market mechanism. That's what we need.
Okay. Nilesh, are you confident that we can move down the path? Because the ease of doing business, as Akhil says, is we are way down the ranks. How easy is it for us to leapfrog into, say, the top 50?
I think it's relatively very easy. All it requires is mindset change. And in some parts of India, we are already doing that. So in the state of Gujarat, Thermex put up a project where the approvals came in 15 days, and they were putting up a project in Maharashtra where approvals took about 3 years to come. So in one part of India we know how to do it quickly, other parts we just copy from there.
And this is using the same regulations.
Precisely.
So isn't it that a little more difficult getting that mindset change done, because if it was just a stroke of the pen, it's perhaps a little easier?
I think there is an awareness today broadly in the political class that electorates are electing those governments which have done something for growth, something for employment. So I don't see a problem from changing mindset on the political side.
Okay.
The second thing is again from the entrepreneur side. There has been various examples of different entrepreneurs who have succeeded in different ways. Now clearly they also have to turn around and say that, okay, we will use market as a mechanism to succeed rather than using our connections and everything else to succeed. So we require mindset change not only at the government level but also at the entrepreneur level.
Navneet, how do you deepen this market?
From the funding side, so of course, as you mentioned, that you need on one side ease of doing business, but you also need an ecosystem where companies or projects can raise money, both the debt and the equity capital, and that's why some of the moves like issuance of infrastructure bonds by banks or REITs or investment, the infrastructure investment trust and so on and so forth. But we need to ensure that a large amount of savings that we have, household savings, and a good part of that actually is going into unproductive assets like real estate and gold. How do they come to financial assets, and that can actually fund the productive assets, that can fund the, whether it's infrastructure or housing for all or non-renewable energy or whatever, all those projects. So we need to deepen that market, ensure that long-term savings come. So something like a US 401k, I mean, we've got some 40 million odd mutual fund investors, while you have 700 million bank account holders. Even if there are, let's say, 2 or 3 names for the 2 or 3 accounts for one person, but still there is a huge ground to cover. We need to ensure that. So whether the same ease of doing business, a single KYC, once a person has opened a bank account, he can actually invest across all financial products. Similarly, I will ensure that how the companies, the way they do in US, where they can deduct from the salary or from the payment they are making, and it goes into a long-term savings. We need to build that culture. We need to invest in financial education.
Interesting point he raised about how do you get long-term capital into the markets. Is enough being done in India for that? Is enough being done to get insurance, life insurance, pension funds to come, Indian, I'm not even talking foreign, to come into the capital market?
I think, as you rightly put, there is a huge gap right now that we see in terms of at least the long-term financing. See, a lot of banks are very effective when it's about, working capital financing. But there is a very specific skill that you need to evaluate projects and do long-term financing, and a very different kind of infrastructure is required for that. And today I don't think we are equipped for that. In fact, if you see, a large part of savings is actually getting rooted to very unproductive assets, as he said about gold, real estate, and all of that. If you can build in a mechanism which is more market-led and which is transparent, gives confidence to the end investor, and gives at some level some kind of a protection, and that money can be channelized to making productive assets, but that cannot be done without a very strong mechanism of government focus and buy-in and support to that. So I do think there is a big gap in terms of availability of capital for long-term financing.
Interesting that there is this feeling that Indians invest too much in gold, too much in real estate, unproductive assets. Is that because there are not enough opportunities? Do you think that needs to be controlled by legislation, or do you think that if growth opens up, money will just move into that? Money will just be taken from under the mattress literally and put into growth opportunities?
I think, to me, tackling the inflation is the country's highest priority, because that will lower the interest rate. That will also then make a lot of projects which are stranded now viable, and the money will start flowing. The consumers' savings will get recycled into, it won't happen overnight, but long term. I don't see any issue that if we have stable financial markets and steady growth of 8%, which will be mirrored by stock market steadily going up, and obviously Nilesh, you're the expert on that, not me, then I think retail savings will get channeled to the financial market.
How many people sell mutual funds? How many people sell gold? The distribution reach of gold will ensure that no matter what legislative change we made, savings will continue to go to the gold. The sheer distribution power. I mean, today I don't think so we have a mutual fund agent in this country who can go to a housewife and collect her pocket money or secret money.
Who's fault of that? Is it yours, or is it the fault? The industries? Is it legislation? Is it?
It's purely the incentive. I work for money. A mutual fund agent will work for remuneration. Today, when I'm selling gold in smaller denomination, I can probably charge 25 to 30% premium. If I have to earn 25 to 30% in mutual fund selling, probably I have to wait for 30 years. So clearly the gold is being sold because the incentives are heavily aligned in selling gold. The second thing is also mindset change. All along we have been told that equity is risky and hence it gives higher return. I think we need to change the communication that not investing in equity is risky. In this budget, I think we have taken a very important step of single KYC. I mean, today many a times people are not investing because of the paperwork. If I have to fill the IPO application form, I'm not sure whether I will be successful in filling that after spending so many decades in financial market. So single KYC, simplification of paperwork, I think that will bring investors back into the market. And if we can realign this distribution incentive, which can repair this distribution network, which can then go and link the last mile connectivity with the investors, I think we will see a revolution in our market.
Edelweiss and CNBC TV 18 present Change India, what India needs.
This issue of assets under management in 2008 till today have hardly gone up by, say, at lower than the rate of inflation. Whose fault is it? Is it the industry, or is it regulation? Is it the lack of distribution incentive? How do you get the money into funds?
Definitely needs some fiscal incentives. World over, look at any country, I mean, there has to be fiscal incentives. I gave the example of 401k. So from your pre-tax income, I think something gets cut, your employer makes a contribution, directly goes into equity for a very long time, or long-term bonds. You need to increase the awareness.
So 401k in India, what would you say pension fund?
Some kind of a pension plan, long-term pension plan, where there could be an aggregator who collects the money, he gives to managers like us who manage the money, and then at the end of the retirement, I think we can buy an annuity from an insurance company, and the whole ecosystem works like that, make it very cost effective, but take a longer term view, and there has to be some fiscal incentive and the overall environment. And make it as simple as possible that anybody can invest. Also, I think need to invest a lot more in the awareness in India. As Nilesh rightly said, that people consider equity as a very risky. The fact is that 10, 15, 20, 25 years, if anybody invested in my fund or anybody else's fund, I think they would have got high teens, 18, 20, 25% CAGR over the last 20 years. But what happens that because we had those bursts of the bull market in 85, 86, then 91, 92, and then 99, 2000, and people came at the fag end of the market, didn't make money, and the perception that you don't make money. 2003 to 7 was a long-term bull market. So of course, like US, you need to have that long period of non-inflationary continued expansion where books were written like stocks for the long run. It went to people's psyche, just like the psyches today is that gold and real estate are for long run. You need to change that.
But I have a slightly different take on this issue. I think as a country we have currently a per capita income of something like $1,200, $1,250 a year, and at that kind of an income level, the number of people who have real need to put money in stock market, particularly in equity market, I think is very, very low. I don't think equity comes as a natural instrument of choice for these people.
But why should, because equity at the end of the day is the hedge against inflation, if you really look at it as a...
Yeah, but I think the volatility of equity can be very, very demoralizing there. I mean, it's very good to say 20, 25 years, but the fact is when I start to put in money and I start to see my wealth getting eroded by 10, 15, 20%, it does take a toll. The thing is there a need to bring in instruments which fit somewhere between equity and debt? It is a little dramatic to say that, but I have not seen many countries very successful for that. But for a country like India, I think special incentives like tax breaks or capital guaranteed kind of products over a 4, 5, 10 year kind of a period, I think that is what will actually incentivize a lot many more people to come into these kind of markets.
Okay, would you agree that you need a halfway house incentives, a hybrid instrument, or do you think get inflation down, everything is sort of, you get inflation down, interest rates are down, it gets...
Yeah, we have seen that phase where we had a problem of too much money in the market, right? And that time, we had actually low inflation and decent growth. So I think as soon as we return to that era, this debate about money supply will be over, except for the long-term money. I think the long-term debt still is an issue, and for infrastructure, we do need long-term capital, and we don't have debt markets to support that. Currently, because inflation was high, real estate and gold was perceived as inflation hedge, so a lot of money went into that. And if I put money in fixed instruments, I didn't even get compensated for inflation, forget about any return, any real return on that. And equity markets were volatile and very risky, right? So, and the growth was also sort of coming down. So as soon as we change the growth scenario, which hopefully will change soon with proper governance coming in, then I think we can go back to the era where we'll have to worry about more money coming in than we can handle, frankly speaking. Biggest impediment to investment is perceived risk. So when the governance goes down, your perceived risk suddenly goes up.
Okay.
When foreign investors suddenly lose 30% of their value just because of currency depreciation, your whole faith gets lost in the country. And any regulatory issues that you can have a retrospective change in policy, the foreign investor lose faith that if you cannot know under what policy, under what rules I'm investing, how can you invest? So I think the first and foremost is consciously you have to think about how do we reduce the perceived risk, not just the actual risk, the perceived risk.
How much of the perceived risk come down with the new government relation? I just got number that the number of companies that raised debt in the first 6 months, I think it's almost as much as they raised last year, $13 billion. So
I don't have the global numbers, but I have the local numbers, where every single listed multinational subsidiary company has outperformed its parent by a multiple time in US dollar terms.
okay.
So whether it's Hindustan Lever versus Unilever, P&G versus P&G, Nestle versus Nestle, Siemens versus Siemens, Maruti Suzuki versus Suzuki, the experience of Indian multinational listed company outperforming their parents by a mile in US dollar term is present.
Okay.
So this is something which we need to convey to the investors that look, by putting up a company over here, you have created huge value. And that value creation is significantly superior to what you have created back in your own country. Then second, as Akhil rightly mentioned, that I also need to reduce that perception of risk. Now this is all related to how do you invite the guy. And having worked in a multinational company, this is a simple experience. One of our fund manager, when he visited Turkey, the finance ministry of Turkey will send a representative to ferry him from the airport. He will receive a red carpet treatment. When he came to India, the immigration itself was so difficult, and he'll carry passport with 400 pages, he'll be asked to find a visa. I mean, the entry point, at that point of time, only the investor will be coming with negative perception. I mean, when the FII is coming into India, will he get clarity in terms of taxation treatment? Will he get clarity in terms of how he can bring in money, how he can take out money? Will the regulations remain stable? So on and so forth. The other thing is also the celestial combination. Today in Russia, investors will not go because of Ukraine crisis. In Turkey and Thailand, there are political reasons to not go. In Indonesia, there is a political revival, but again, people will see how they deliver before putting in the money. In Brazil, there is a weaker macro. In China, there are worries about credit growth. Effectively, India is the only country where people will be happily cutting check.
Will we blow it, or can we do you think this government can go out and actually make that lovely combination of stars work for us?
I mean, putting it in some other words, I mean, there are countries in the world which are determined to grow, but we are destined to grow.
Okay.
Honestly, now we have a leadership which will ensure that we have a determined leadership as well. So, okay. I mean, that's a great combination. I think we've got the nice framework in place for a concoction in place for a long-term sustainable market. What do you need? You need a stable macro environment for next several years. I think we've got that. Twin deficits are behind us. I think this government is committed to fiscal consolidation, and you have a central bank governor, I think, who's very, who will ensure that the way currency is managed, or in terms of, the CPI targets. I think the bad combination of, higher inflation, lower growth, I think for next several years we'll have rising growth and then declining inflation. So overall macro environment looks quite decent for next several years, and then also, that would be the result of stable political environment.
Before we end, 1, 2 or 3 points, action that you'd like to see from the government to make that will tell you that yes, their intent is serious.
I think first is clearly that they have to tackle the inflation, right? And second, I think they should set up a body to say, let's look at all the regulations that we have, examine them from first principles, and see which archaic regulation we need to get rid of, right? And the third thing I would say, I think we should invest big in solar, because solar displaces energy in the peak side when you're displacing diesel. So we can have at least $50 to $100 billion worth of investment in solar, and you get a guaranteed return. You borrow money at 4% debt, because Chinese or Japanese will be happy to give you debt against the panels that you buy, and you get 18 to 25% return on your thing. That helps your current account deficit, that helps your energy deficit, and that will help your impending capacity issue that we will face a couple of years from now.
Change the mindset that equity is risky. No, not investing in equity is risky. Let there be a conversation where a son actually tells his father that you sold Wipro in 1990 and that's why I'm staying here, otherwise I would have been there. The second thing is simplify. Today, if a person wants to come into financial markets, he goes through various level of processes. those processes needs to be equated with when he's entering into non-financial market. The third thing is incentivize. When eventually financial products are sold, and if you don't have distributors who are adequately incentivized to sell that, you are unlikely to get the last mile connectivity.
How about you?
The government needs to focus, I think, a lot more on the execution side. So for ease of doing business, you need to have the right policy framework, you need the right taxation regime, you need a retrieval mechanism, and you need to have the right clearances and the execution in place. That will ensure that both the foreign investors and the domestic investors will have a lot more confidence. Look at the balance sheet of the government, look at the balance sheet of the banking sector, look at the balance sheet of the infrastructure developers. You cannot develop the infrastructure, the need that we have, unless you put this ecosystem in place of the ease of doing business and then the way to funding it, the way of funding
So
it.
deepening the financial market, both of you were talking about it.
Yeah.
How much can industry do? Why is it that, say, an Airtel or a Vodafone have been able to go and sell so many SIM cards, but the mutual fund industry hasn't been able to go all across the country? What has been the,
several things that I talked about, whether it's the fiscal incentive, whether it's the kind of the awareness, the simplification, KYC and all that, and the ability to reach out. As I rightly said, I mean, the funds are pushed. I mean, it's not that somebody is coming to you. People go to, let's say, Vodafone and ask for a SIM card. Nobody comes to my shop and say that I want to invest in Magnum Equity Fund. I mean, somebody has to go.
I'll just add on to that point. Actually, it's very interesting that we talk about, mutual funds, but you just see what has happened in the insurance industry. There you don't see so much of an issue in terms of penetration. The reason is very simple. You've got maybe 15-16 lakhs of people who are actually distributing their product. You've made the incentivized them, and you've not choked them with a lot of regulations. The other issue that I face in terms of this intermediary ecosystem is people don't get respect. Somehow it's a very unique situation where brokers or small time distributors, they don't get the kind of respect that they deserve. They're always seen with this suspicion that they might missell. Yeah, of course there would be some people who would do that, but you need to incentivize and give them a little more.
Make regulations that are done through the baby out of the bathwater.
Yeah.
Therefore, thank you so much for joining us. We could go on. Thank you so much. And that's what we've got time for in this edition of Change India. We'll be back next week.
Edelweiss and CNBC TV 18 present Change India. What India